Hey guys, it's Chris Mincola with the Mincola Group over at West USA Realty, and I'm here today with Evan Einhorn with Modern Home Lending. How you doing, Evan?
Good. Thanks for having me. How about you?
Oh, I'm doing great. Things are starting to get busy again, which is great. Right after Super Bowl, right? It seems like right after Super Bowl, after the holidays, but right after Super Bowl for sure. Things kind of
Holidays, New Year's, Super Bowl, especially in Phoenix. You can't,
right. It's just that
no one can drive
seasonal
around
thing.
with all the traffic.
Yeah, exactly. So, I wanted to get into the market a little bit, Evan, but
Mhm.
why don't you first kind of share with us, for a lot of first-time home buyers, they've really been priced out of the
Yep.
market. Like, what do you have that you could share with them, maybe to give them some hope as far as what you're offering? And Evan again is one of our preferred lenders. He's a mortgage broker, which is different than some of the bigger names that are going to spend a lot of money on marketing that are going to charge you more, which is one of the big, things. And then he just
Yep.
shops the best rates and terms for you. So
Having options matters for
yeah.
sure. Um, well, the government did realize that, hey, things have become less affordable and they want to help the first time home buyers. So, bad news last year for anyone buying a second home or vacation home, it became a little more expensive. However, what they're doing with that is now they're giving, one of the things that they have made more affordable is for first time home buyers. If you make less than the area median income, so in Maricopa County, that's roughly 88,000. So
Right.
if you're first time home buyer making less than 88,000, does not matter what your credit score is, does not matter what your down payment is. If you qualify for a conventional loan, they will give you the best possible rate. So
Right.
if you have a 690 score or 3% down, and you're under that and a first time home buyer, you could be getting the same rate as someone with an 800 credit score and 40% down. So
Wow.
that's a huge win for first time home buyers.
That's amazing. Yeah.
Yep. On a similar note, and this is local to Arizona, and not a lot of lenders have this, but we do. We do have an Arizona first time home buyer tax credit. If you're non, and just so you know, first time home buyer, Chris, do you know what the definition of first time home buyer? You might, because you're in real estate.
Anybody who hasn't bought a home in the last 3 years, correct? Is that
Yep,
still the standard? Yeah.
correct. So if you sold a home 3.5 years ago, you're a first time home buyer. So you qualify for those rates, assuming you qualify for the mortgage under that income. We also have a separate tax credit program, and you can use both of these. A separate tax credit program that you can get up to 2 grand extra tax credit towards your refund. So if you pay taxes at least 2 grand a year, which most people do, you can get up to 2 grand. Now, there is a limit, roughly 366 and change on the home purchase price. In low income areas, you can actually go over 400. So there's some little things in there, but a lot of our first time home buyers do qualify for that. So they're getting the best rates and an extra 2 grand tax refund every single year on their taxes. So contact me for all the details, but those are two huge wins for first time home buyers that are fairly new to the market.
Great. And somebody hasn't bought a home in 3 years. Does that count for someone who's selling a home and then buying a home and they haven't done that like in 3 years? They already own a home, or no? That's just
So that doesn't qualify. There's some exclusions, like if you went through a divorce, kind of thing, or if you inherited at home and you didn't buy it, there's some exclusions to still be a first time buyer. And that tax credit program, just a quick note, that is available to veterans even if you do own.
okay.
But for a lot of the homeowners out there right now that are considering buying, because there are a lot of people that, you know, bought their home years ago, have a lot of equity, considering should I rent this out? And that's where I point them
Yeah.
to you to say, hey, I know you do a great job on the rental side, right? Just
Yeah.
looking.
We can figure out what the rentals are going for in the area, which, right now we have a really strong rental market, in the area. So that's not a problem. Yeah.
Right. But so, if you decide to rent, great. We can see, hey, what do you qualify for on the new house with renting your current one or before renting it? And then we also have a nice bridge loan. So I know not everyone wants to sell their home and then buy the new one. We have a new one where we just look at, okay, even if your home isn't sold, if you have enough equity, we're going to look at just the new home and just qualify you for the new one. So that way you can buy your new one and possibly zero out of your pocket because we're using the equity on this for both. You need to have enough. So
Right.
again, reach out to me. We can go through the calculations. But buy the new one before you sell your current one. So that way, if you have, I know I have a couple dogs. It'd be fun to say the least, showing a house with them.
Yeah.
We'd make it work, but the bridge loan program is a nice way that, hey, qualify for the new one, buy the new one before you sell your current one.
And guys, I totally relate because we've got five. Well, we had six. Now we got five dogs. Rooster passed away. But this works great for people like myself who, showings with six dogs or five dogs is crazy. Yeah, kids and everything. So this is a great way to move on, get what you want, and then, go ahead and sell the house later. And then we can do all the open houses and have all the showings. So I highly recommend it. I did it. I love it. So let's talk about some of the current trends and do
Yeah.
a quick market update for people. Not too in depth. I'm gonna share my screen here
Yeah.
with you guys really quick, if that's okay, Evan. And
I know we were talking about a couple of these stats before we
yes,
started, but yeah, share your screen and show
here
everyone
we
what
go.
we're talking about.
So hopefully everybody can see that. Fed hikes, basically, Evan, we know inflation drives mortgage rates, right? And people are, when they hear the word recession, they think 2008 crash. It seems like everybody thinks the housing market's going to crash automatically. And we know, unfortunately, people are going to lose jobs and all that. That's certainly, and things are tough during a recession.
Mm-hmm.
We get all that. We're not, we have empathy for that. But, when the Fed hikes mortgage rates to basically, because inflation drives mortgage rates, they hike the mortgage rates, lead to the recession, and they do that to tame the inflation, to lower the mortgage rates.
Right.
And just go ahead.
I get this call all the time. Hey, Fed just raised the rates. What does that do to mortgages? That's completely different. That's a rate
Right.
for the banks, other stuff. Mortgage rates, like you were saying, do tend to go with inflation. So inflation started to come down since October, November. So mortgage rates have started to come back down.
Right.
But yeah, good point.
So next slide, I just really quick, guys, we're going to run through this really quick. I don't want to take Evan's too much of your time and Evan's time up, but unemployment, and I've shown some of these before, but unemployment rate and recession, it always brings down we have to deal with unemployment and everything, which we'll talk about in a second, but we have the time before it's even, set by the fact that they even announced that we're in a recession, right? So it's usually lagging. You usually figure out we're in a recession after the fact, right? They usually tell us that. And we see that, the average lag is about 2 months. Part of the issue also is shelter costs, right? So shelter costs are always lagging. And the CPI for the inflation is always year over year, right? That's what they're looking at, year over year inflation rates that drive the mortgage rates, right? Evan, am I correct on that? Okay.
Yeah, I mean, tied
in
very
general,
closely together. Exactly. Yep.
Yeah.
Yep.
And the shelter costs make up part of that. We know shelter costs are going down, but again, it's always lagging, right? We always figure it out or hear about it after the fact, and then the markets
If you
adjust.
Right, if you have a 12-month lease, your lease only changes once a year, and that's a big driver for inflation. So when
Exactly.
people are renewing at the same amount or maybe barely higher, that helps inflation come down. It's not, a lot of people's rent this year I mean, even though they're strong rents, they're not necessarily going up 10% this year.
Exactly. So year over year, looking at those numbers and the inflation rate, basically, Evan, Barry Habib has been predicting this and talking about this as he always does for months, and he's usually correct unless something comes out of left field, like he says. In other words, what's likely, right? What's likely. So he already told us, which we figured out this week, we're probably going to have bad news all over the media, and then we're probably going to see the same thing in April. But and March should be okay when we look at year over year inflation rates. But when we get to May, or the May 10th announcement of where we are, he predicts that we're going to start seeing, because of the year over year inflation and all that and shelter costs, we're going to start seeing rates drop at that point because inflation is just tapped out. Correct?
Right. There's a lot of experts expecting the summer, May, June-ish, that it'll likely be a little roller coaster until then, but
Yeah.
we do have relief in sight, and we already have relief.
Yes.
In October last year, or the first week in November, the interest rates are over 7% on average.
Right.
We're below that now, thankfully. So
Exactly. So, even though we have this, people are gonna, let's say 1% of people, he mentioned this too in his latest announcement, 1% of people lose their jobs, which is about 1.5 million. But if the interest rate drops another 1%, that means we've got about 5 million more people who can go into buying a home now. They can afford to buy a home and get qualified, right? I mean, using round numbers, that's kind of how
yeah,
it explains it.
I mean, unfortunately, when recessions happen, people lose jobs.
Right,
Um, their mortgage rates typically drop. And the impact on the housing market is what we're talking about is, yes, unfortunately, less people qualify because they don't have a job, but everyone that does have a job will qualify for more. So that's the reason that just because unemployment goes up, you don't necessarily see an immediate housing impact. And that's
right,
what we're talking about.
right. There's always that lagging effect, and hopefully, with them taming, it'll end up stop the taming at some point, and we may, people may actually have better credit card rates and things like that too, right? As an overall impact on affordability, right? So,
Right.
but you know, then and now, everybody goes back to 2000, but 2008. Well, that recession was caused by over inventory, which led to poor lending practices. The builders overbuilt and they had to unload it somehow. So let's do poor lend. A person could fog a mirror, they could buy 2 or 3 homes. Everybody watched The Big Short, or whoever watched The Big Short would know, right?
Great
So
movie.
I won't get into the scene of what was going on in that, but anyway, that was, so if we look at the lending standard chart I've got up right now, the controls on this are much different than they were during 2008, correct, Evan?
Yep. Yep. I wouldn't say it's hard to
No,
qualify for a mortgage, but we need to document everything,
it's more normal.
and it's more normal, and that's what we're here for. I'm the bad guy. I'm asking for documentation. We try to help people, but that's the biggest difference is everything is documented.
And that's kind of what we're seeing in the market, right? An adjustment, and now we're seeing a balancing and kind of more of a normal market. When we say we're technically in a seller's market, which we'll talk about in a minute, in the Phoenix area, we're not talking about the insanity market we were in the last year or two. So
Yep. Yep.
foreclosures, just another chart to throw out here, guys. Foreclosures then and now, 2008 to now, again, over the last year and a half or 2 years, we had these forbearance things, and basically where you almost couldn't fail, right, on having a foreclosure. So, some of the headlines are, right, Evan, foreclosures are up, this percent or whatever, but it's from nothing, right? When we're looking
Right.
at this. So,
Right. A lot of people couldn't foreclose. There's a lot of foreclosures that were backed up, or foreclosures that were backed up. Um, and it's unfortunate to say if you get to zero foreclosures, that's not a healthy market, because that means a lot of people aren't getting qualified that should. So there's a healthy balance. We don't want 1 million foreclosures. We also don't want 100,000 foreclosures.
right.
There's a healthy balance of, hey, because if you make the lending guidelines so strict, then you're preventing home ownership.
Right.
So it again, like you said, I can't wait, and I think we're getting there. And I think this year and the next year, I think we're gonna have healthy markets. That might be slow appreciation, values going up slowly,
Just
healthily,
normal.
normal. Exactly.
Yeah. Yeah, exactly. So, and Barry's, again, here's the chart. He's saying, look out for May 10th, but, you know, he's saying we're probably going to be around 5, possibly below 5. I would say conservatively, we may fluctuate between the high 4s and mid 5s anyway. If this,
Yeah.
if this all goes as planned anyway.
Yep. Well, I mean, we'll have to see, but there's a lot of experts expecting, hey, rates at some point. There's some experts that think we'll be at 4.5 by the end of the year.
Right.
That might be a little aggressive, but we'll see. You know, um,
And I've got a chart up here that basically shows recession means falling mortgage rates, you know, throughout all our recessions. We
Right.
see that we had again, 3.8 million during the peak of the crash. Right now we've got 1.2 million in inventory, or 1.2.5 million.
Right.
Um, you know, overall, a lot of those are under contract too. Over 500,000 of those are already under contract. And I just threw this chart in there for fun. This is you know, one of the mainstream media people, Barry Habib, likes to pick on Diane Olick, but she's usually wrong. He goes into this chart where he basically shows all the way back to 2015 to 2021 how much money you would have lost starting at 300,000 back then to 2021, and all the things that she had to say. So you know, and how all those things are wrong. So anyway, I think we should talk a little bit more about the local market, Evan, and kind of wrap it up. What do you
Yeah.
think? You
Yeah.
know, do you have anything to share anecdotally, or what you're
Oh,
seeing or hearing in the local market on rates and applications?
yeah. So I don't need to share my screen or anything, but just a couple quick stats. Um, you told me before this call, local inventory, Phoenix market is just over 15,000 homes for sale. To give you an idea, pre-pandemic, January 2020, over 16,000 homes for sale. And just a few months ago, we were almost at 23,000 homes for sale.
That's right.
So over the last 30 days, there's almost double the amount of people under contract. So, you know, I don't know exactly what it is. I mean, I'll share some stats here.
Yeah, go for it.
But
While you're pulling that up, let me just say right now in the Cromford Market Index, we are at 121. That puts
okay,
us at an overall seller's market. So our supply is at 65, which is low, and our demand is at 79, which is ticking up. So these numbers are increasing to the better for sellers.
right,
And again, not crazy, but more of a balance.
right, right. So this is what I was just talking about, October 2022. So just a few months ago. And inventory always goes down, typically 10-20% in the winter. No one
Yeah,
wants to list their home during the holidays. But like you said, we're just over 15,000. That's over a 30% drop in homes for sale,
yeah,
you know? And this is pre-pandemic. So this is, look at the stats here, January 2020. So we have less inventory now than we did prior to COVID. And typically inventory starts going up the last week of January or the first week of February. We have not seen that quite yet.
no,
And I'll show you why. This is local data
yep,
in the Phoenix area. This shows how many people are under contract to buy a home. Yes, during the holidays, if you look late December, early January, there's like not a lot of activity. But all of a sudden, within a month, people are off the fence. And, you know, I think that's a couple of things. One, we're past the holidays.
yes,
Two, rates are lower than they were in October, November. We hit a peak. And I think
yep,
people are just tired of waiting for the crash. I've heard that, you know, admittedly, from summer to the end of last year, prices did drop in Phoenix anywhere from some areas 20%, but
mhm,
totally local to your neighborhood. There's some neighborhoods that didn't drop at all, you know. But I think people saw that, hey, we got a little relief. We got a little relief on the interest rates.
right,
Now I'm gonna get off the fence.
yeah,
So it's been an interesting time. Definitely a good time to have a good real estate agent and a good mortgage broker in your corner, because the market literally versus 30 days ago has changed. And most of the reports that are released are monthly reports. So a lot of this weekly and daily data that you and I look at, they might not have February data until March 15th
right.
versus you and I are looking at February data right now. So it's always good to stay in tuned. I talk to all my buyers all the time. What's happening in the market? Let's look at the weekly and daily data just to see where it's going. Because again, if you took a month off of looking at the stats, you know, you might have got this report that, hey, finally we're doing well, you know, since the
It's
new
so
year.
true. I mean, if you even look at some of the reporting 2 or 3 weeks ago, they were still using December numbers,
Yep.
where we were already starting to talk about January numbers and how you just pointed out under contract just went nuts for our local area.
Right.
So
Right.
again, not saying that it went nuts like last year and all that, but
Yeah. It's
it's
not
just
2020, not 2021,
yeah,
but there's some stats that show it's slightly hotter than it was right before the pandemic.
right,
So, and I'm really hoping it, it to me, like you keep saying, the word normal, the word healthy, you know,
yeah,
um, this, this is not fun for anyone, you or me. We're here to help you through it at
right.
all times. You need professionals, but I'm optimistic that we actually have a normal, healthy market. No 20-30% appreciation again for homeowners. That's great, but just overall longevity, that's not great.
Absolutely. And I always tell people, you know what? If the market tanked, it would almost be good for our industry. So, because people are always like, well, you're just saying that. But it would almost be good because we could go out and invest in properties, or we could get people into homes faster if they were a lower price. Do you know what I'm saying?
Right.
So we're not just, these are just the data points and the numbers. That's all we can do, right? And what's likely to happen because of this or that.
Right.
Nobody has a crystal ball, but Barry Habib's won that award like 3 times. So I'm pretty confident in a lot
Yeah.
of ways.
I don't pretend to be an economist, but
No,
we listen to the experts every day. We look at the data daily. We also, and anecdotally, we see what's going on. I mean, I know a couple agents I was talking to, they had a listing that no offers all of December, and then all of a sudden, one weekend in January, they got 2 offers.
boom. Yeah,
So, it's just it's different. We're past the holidays, so should be a good year. I'm optimistic. I don't think anything crazy will happen.
no.
Positive. I don't think we'll see 20% appreciation or 20% depreciation. Only time will tell, but all the data is pointing to a healthy market.
Yeah, it's pretty much a shocker when you go from 3 to 7% interest rate, right? And then the
Yeah.
holidays hit. So that's kind of where we were at the last several months. But anyway, Evan, thanks for joining us.
Yeah.
You have to run, and I do too. So guys, if you have any questions for Evan, how do they reach you, Evan?
Yeah. You can go to modernhomelending.com or email me, evan@modernhomelending.com. Phone number is 602-456-2273. Again, 602-456-2273. Reach out. Happy to discuss the market, your situation, all these kind of programs, because again, always changing. So I appreciate it.
All right, guys. Thank you. Thanks, Evan. We'll see you next time.
Cool. Thanks, everyone. Thanks for having me on.